are in listen-only mode.
Well, good afternoon. This is Jim Guinan here with Insurance Agency Marketing, and want to welcome you today for our afternoon webinar. We will be joined here in a moment from Athene with Rob Johnson in the Athene sales area. And Rob has some updates to give us about Athene's increasing rates, and also a little bit more on the product line that Athene has to offer when they're constantly staying ahead, trying to be very competitive in the annuity marketplace today. So in a little bit here, I will have Rob talk with you and update you. So I do want to remind you that today's webinar is recorded. So if for some reason you can't listen to the whole presentation, or it'll just be available for rebroadcast. So we do want to remind you of that. And so with that, I do have a couple things I'd like to update you on here that's going on with insurance agency marketing, and then we'll talk with Rob. As you can see here, we do like to promote our new producer bonus. And for those of you that have written business with us here at Insurance Agency Marketing before, this is not new to you, but for those of you that are relatively new, we do reward producers for writing in their first 180 days with us. And as you can see, the more that you write, the more that you can look for a reward, including cash out. So again, if you're an annuity writer, for example, um, not a lot of business has to be written to get something for that, and we do appreciate that. So having worked at another IMO for a number of years prior to IMs, I can tell you we did not offer anything near to this. So this is a great way to kickstart your business with us. We, as a way of showing we appreciate it, we want to reward you for that. So if you do have questions, there's different production levels that you need to hit for annuity than, say, single premium life, but suffice to say, a great producer bonus. We have recently announced our next Top Producers Escape destination. It will be Boulders Resort and Spa, and that will be in Scottsdale, Arizona in February of 2018. So as you can see at the bottom of the slide, it does say qualification period. That did start July 1st of last year, which was the day after our other trip ended. And so we're already 6 months in, and we have another approximately 1 year to go. So it's an 18-month qualification. The production stay the same. So if it's annuity business that you're writing, for example, it's $2 million of annuity premium will qualify you for this fantastic destination. And the theme business also counts. So any of your annuity production with our top carriers, including Athene, does count towards this Top Producers Escape in Arizona, February of 2018. Okay, and one of the areas that we've seen a lot of growth from and a lot of demand from our producers is on the creative side here at Insurance Agency Marketing. We've seen quite an influx of interest in and usage of websites, also email marketing, email newsletters, ways to reach your clients in different ways. So if you haven't looked into this, you want to talk with Josh or Adam, and they can help you produce a program tailored to your business and your business plan for 2017. Give them a call, and they'd be glad to visit with you about some opportunities, what they can do for you, and give you an idea of what that might cost. So I would encourage you to do so. If you have not created a website, that would be I think a good thing to consider or look into for this year. And email, well, and I mentioned the email newsletters, and as you can see, that very top line telling us that 86% of internet users age 65 and older use email. Quite an interesting statistic. So people are on the internet, people are getting emails more than ever. So again, we would encourage you to look into taking advantage of tools that are available to you and lean on our creative department to help you with that. Again, Josh and Adam are the ones to talk to here at Insurance Agency Marketing. We did just recently announce our new academy dates for our Life and Annuity Academy, and those are for um, May 17th through May 19th is our next academy. And if you're interested in learning more, getting some information from us, or would like to talk about that, please let me know or any of the annuity or life marketers. This is a 2-day training. We do pack a lot of information into that. We are looking for producers that are writing life and annuity business now that want to grow that and utilize the information that we provide. We do usually have several top agents attend so that you can get some ideas from them. I will say that the academies are again geared for those people that are writing business now. If you're just starting out in the business or you're brand new to fixed annuities, for example, I would say this is not an academy for you. Again, if you're interested, we have sent out an email about this already, and we are taking registrations. We usually look for about around 40 producers that can attend, and it is all expense paid. So we are trying to be selective in our choosing here. So I will ask a poll question here. If you'd like to go to our academy or get a registration or have more information sent to you, please respond to the poll question. And I will launch that now. Sorry, I thought I already had. So again, just give us a response if you are or not. That's fine. We do like to get a good sampling here to find out, who's interested. And again, if you do get the registration, it will ask you questions about, how long you've been in the business, how have you currently been prospecting, and what kind of annuity and or life production that you're writing. We would appreciate your responses to those. So again, May 17th to the 19th. I know that sounds like a long ways away, but it's really not that far away. I mean, we're talking several months now. And we do have, I believe I heard this morning from Amber Williams that we had 80 registrations already, and the email just went out. So again, many of those individuals are, like I said, are going to be people that may not be qualified. So, but at any rate, we do appreciate your response, and I'm going to close this in about 10 seconds. So please answer yes or no. And after the after the webinar is over today, we will be sending an email out with more information and a registration link. And as always, if you have any questions, just call. Okay, and then the slide that we're currently on now talks about paperless contracting. One of the things that really helps you, the producer, be more efficient and spend less time filling out contracts is our paperless contract, which is great. You fill out the information, you answer the compliance questions. You're pretty familiar with contracts. You fill that out. Almost 90% of our carriers use this system, so that going forward, if you want to get appointed with multiple carriers or later on add another company for annuity or life or MedSup, whatever it might be, all you have to do is let your marketer know or let Chris Mount know in our contracting, and we just add the company. You don't have to fill out any more paperwork. So it's a great way to get appointed with multiple carriers at one time or in the future. Okay, and our website does make life easier. If you've not been to our website, it is www.iamsinc.com. That's IAMSINC.com. And that website had been updated here, I would say probably about a year ago, so it's much better than it used to be. We do have now for you, the producer, the ability to quote term insurance. You can get on there anytime you'd like. We also update our rate book, which each of us has at our desk, but it has all of the top products by bonus, by carrier, and then we also have our top multi-year rates. That rate book is put on the website fairly regularly. I think it was just updated last week. So even when we're not around, if you want to know the issue ages, the commissions, what surrender charges are, and what what else? Current rates. All of that would be on that rate book on the website. It also has our webinar schedule, and there's a lot of tools that you can use. And we've been constantly trying to update that website based on your suggestions and the needs that are out there. Okay, and do want to talk a little bit about our wealth management here at Insurance Agency Marketing. It is an insurance-friendly asset management solution built with the advisor as our priority. We recently completed our IMS Wealth Management. So if you are interested in pursuing your Series 65 and becoming under an RIA, I should say becoming an investment advisor rep, we now are equipped to help you with that. If you already are, you may want to talk with Charles Hiring Jr. He is heading up that division. So it is going to be a complete program for the advisor. And if you'd like to know more, again, there is a separate number there. It says 888-255-7670. If you goof up and just call our regular number, which is fine, you want to ask for Charles Hiring. He'd be glad to visit with you about the opportunities in that field. So we do appreciate your interest in that. If you have interest in that, again, I would suggest that you give Charles a call. We are seeing a lot of interest in this, and I will add that even with the recent news that came out last Friday with the DOL ruling being pushed off for 6 months due to the Trump administration, even if this had been overturned completely, IMS is committed to moving forward with the wealth management division. Retirement Analyzer, again, if you're looking at a more comprehensive way to help your clients, the Retirement Analyzer is available. It's planning software developed by agents for agents. This is it does say free to qualifying agents, but if you're looking at a more involved, in-depth way to visit with your clients about their finances, this is something you want to consider. We recently have had a webinar on this also. Easy Money, moving on and about done here. I want to talk to you about a couple other ways in addition to the new producer bonus that can help you. The Referred Producer Program, which is when you refer other producers to us, we will reward you with an ongoing bonus as they write business. Also, our marketing reimbursement, we will put dollars into an account for you as you're writing your fixed indexed or single premium life business. There's dollars that go into that account for you to use later on for things like lead expense, seminar programs, even E&O reimbursement. Okay, so I want to thank you for that, and now I want to turn this over to Rob Johnson. He will talk to you about what's going on with Athene. So go ahead, Rob.
All right. Hey, thanks, Jim. Can you see my screen up there?
Yes, I can.
All right. Let's go ahead on and launch this. First of all, allow me to say thank you to Jim, Scott, Steve, and Charles, and all of those, Amber, all of those who make IMS work like a well-oiled machine, and appreciate the relationship between IMS and Athene. And I wanted to tell you all thank you for the opportunity to step in on a webinar here and present what we have new here in the marketplace. First of all, thank you. Thank you, Jim, for allowing us to come on. We appreciate that. Just so you all know, my name is Robert Johnson. I am the internal wholesaler here at Athene Annuity. I also work alongside with our sales support rep, John Cravens, and then our fearless leader for our territory is in the field, running around, making sure that he has great relationships with people like IMS. His name is Campbell. I'm sure many of you probably have seen him or have heard him speak before, and so wanted to make sure he sends his regards. He's out in Boston right now. Too bad he can't go to the Patriots parade. He's working today, but he definitely sends his best and his regards, and thanks you all also for your time as well. With that being said, Athene does have some new opportunities here at our home office. Last year, we came out with a product in April called our Athene Ascent product. And so, what we decided to do this year, as we go forward, uh, we wanted to make sure that Athene had what all of our agents might need. So, we've heard the field talk, agents have been asking for certain things, and so we responded. We wanted to make sure that if you had a client that had any type of need, whatever it may be, that we could help you provide that need. Today, we have four different things that you can look at with Athene: income, accumulation, protection, and legacy. Legacy just meaning death benefit, something for your clients to be able to leave behind. Today, we're going to discuss the top two: income and accumulation. Let's dive right into it. We have our, so what we did was we broke out our Athene Ascent income story. We decided that it was best because, as you all know, 80% of what's sold right now in annuities are sold with an income rider on there. So when you're looking at Athene and you have a client in your office and they're saying, I want to be able to supplement my income, I want to I want to be able to leave something behind, or I want something as far as accumulation, you can still come to Athene. When it comes to the income story, we really want you to pay attention to the Athene Ascent Pro series. Now, we do have another Athene series, but we really want you to focus on the Athene Ascent Pro series for income. This income story is really, really taking the cake right now. Right now, we're able to provide income for almost every single client that you can think of, whether they're interested in guaranteed or they're interested in some stack growth options. We have some very competitive payout options with some enhanced features as well. Now, last year we also had the Athene Ascent Pro 5 annuity. That has now that has now been sunset, and we now have the Athene Ascent Pro 7, Pro 10, and then we have the Pro 10 bonus variations. It may vary based upon whatever state that you're in, and we'll get into that a little bit later. Now, we have two options when it comes to the income story. Option one is our guaranteed. I always look at our guaranteed for those clients who are really kind of focused on what is my paycheck going to be. They're not necessarily interested in figures. They don't want things broken down. They really want to know exactly what my income is going to be. Show me what the paycheck is going to be. Those type of clients, and I'm sure many of you are probably thinking of some clients right now who are just that way. They don't want to dive deep into what the market is doing. They just want you to meet a need and provide a solution for what they're asking for. With our option one, you have a 10% simple interest guaranteed for 10 years, 5% simple interest for the next 10 years. So your client goes into this contract, let's just assume 100,000. They go into this contract. Let's say that they go into the Ascent Pro 10 bonus. Option one, they're going to get a 10% bonus on their income, and then they're going to get 10% simple interest. So at the end of year one, they're looking at 10% simple interest plus a 10% bonus. That puts them at 120,000 right at the end of the first year already, and it's only been 12 months. The guaranteed option really provides some very competitive opportunity for the clients to walk away with a strong income play. Now, when we look at option two, that still gives them a really good opportunity as well. Option two, you have an 8% simple interest and for 10 years, 4% simple interest for the next 10 years. But we add whatever you've earned from your cash value, we double that into your income value. So let's just say, for example, You received, you got 100,000. Client puts it in. They get their 8%. They get their 8% simple interest. Not only do they get their 8% simple interest, but as you could see right there, they also get their 5% bonus on option two. So you're looking at 113,000, and that's just right off the back. Once year one ends and we do the stacking capability, let's just say that they earned 5,000. We then take that $5,000, double it to 10,000. So now you have 113,000 plus another 10,000. You're looking at 123,000 at the end of year one, hypothetically speaking, by using option two. So we have option one, 10% simple interest for the first 10 years. Depending on the product, if you're going with the bonus version, you're going to get a 10% bonus. If you go with just the pro version, just the Pro 10, then you're going to get an 8% on option one, and of course, Pro 7, you're going to get a 5%. You're going to get 5% bonus. Even if you have a client that is not necessarily wanting to go into a long-term option like a 10-year contract, then we have the opportunity, and we have the opportunity for them to be able to get this even in the Pro 7 by giving them a short-term opportunity. Here's an example of option one, kind of what we're looking at here. As you can see, a 5-year deferral, 10-year deferral. Usually we would show some graphs, but I think the graphs really kind of show you exactly what we're showing you right here. You defer from age 50 to 55, we're going to provide you with some of the highest income in the industry. You defer from age 70 to 75, still the same story. We're going to provide you with some of the highest income in the industry. And then it even shows you if you're deferring for 10 years. From age 60 to age 70, 70 being RMD age, 70 and a half. By the time they're 70 and a half, $10,710. If they're having to take RMDs, that should be able to cover what they have to take for RMDs. Option two here, you could see we have a guaranteed, which is that's where you're not getting. That's where zero is applied. We're just giving you your 8% every year. That's it. Zero, nothing is being stacked on there because nothing was gained. We're still providing you with some very high opportunities for your client. Even if you look at the worst, the average, and the best, option two really kind of takes the cake over option one if the client is interested. Now, I've had a lot of agents say, Rob, option two sounds nice. It really looks nice. I mean, you guys do a really good job, but my clients are just not interested in taking a risk in an indexed annuity. I get it. Those type of clients actually remind me a lot of my mom. My mom was the same way. She's not interested in being explained what the market is doing. She just wants to know. But when you take a look at certain things here and just taking a look at certain things here in what we have to offer, we are really making some big headway on option two. When looking at option two, it really gives you an opportunity to show the client at these client pieces to help you with that sale. We've provided these client pieces. Now, here's the power of it right here. When looking at this, you see that option one guaranteed, you see that graph is showing you that let's see, we ended the year with 210,000. We're providing the client with $9,660. But option two, after a 9-year deferral period, historically, including interest rates, just option two has outperformed option one 99% of the time. And even to back that up without looking at anything, without going into some analytical data, looking at algorithms and methodologies, you can just simply look at the S&P. Over the past 30 years, the S&P has not returned less than 1.16 over any 10-year period. So you're looking at 3 decades over the past 30 years. With that being said, even with the lowest point of the S&P, option 2 will still outperform option 1. So I know that a lot of clients may not be interested in it, but we've tried to put together a piece to really help our agents really tell the client that this is an opportunity for them to get more than what we're just guaranteeing. If you take a look at the bottom there, you see right there the worst period. It says option 2 annual payout potential with S&P 500, and we're showing you the worst 1.16, the worst it's ever done. 60 to 75, the worst is still giving you $11,643, still greater than what the guarantee would give you. And that's over a 5-year period, just right there. Now, we talked about option 1 and talked about option 2. Option 1 giving you that guaranteed, option 2 giving you a little bit of the stack growth. Let's talk about how the client actually gets paid. So Athene not only wanted to be competitive in what we were giving the clients as far as the income rider and that income value itself, but we also wanted to be competitive in how we paid the clients. So we have 3 different options. We have level income, which is pretty much exactly how it's explained. It's just the level income. There's no change. Whatever it is, it remains the same for the remainder of the contract. Inflation income, where we use the CPIU, the Consumer Price Index, and then earnings indexed income. That provides you where you start out with a lower initial income, but what we do is we increase your income based upon the interest that is credited to your cash value. So if you got 5% credited to your cash value, and let's say you were getting $10,000, we will add that 5% to the $10,000. So let's see, $500 or whatever that may be, we will add that to your income, whatever it is that you've gained on your interest credits, looking at the earnings index. So right here, you could see we're looking at the guaranteed level, the earnings index level, and then the non-guaranteed. So if you get nothing, if you get absolutely no returns, then you're looking at your guaranteed column. But if you do get any returns, and we're just assuming with our BNP strategy, which is one of our newer strategies, and I'll get into that in just a few, just looking at an annual assumed credit of 4.42%, we're definitely going to outperform whatever it is that you're seeing as far as level. So level income going to remain the same at 9660. The earnings, definitely want to earn some money in this contract. We're going to add that to the income, and then you'll see right here the client is going up. 71, 77, 83, 89. The client is going up. The withdrawals, just looking at the guarantee, 231,000. If nothing was gained, they would have done 208,000, but with some return, they ended up with 311,000. So we've talked about our options for option 1 and option 2 to give to the client. for the income value. We've talked about how the client actually gets paid as far as which which option they have to take out the money, whether it's level, whether it's earnings indexed or inflation. But also we wanted to add some additional features to these products. We wanted to make sure that the client was having some opportunity to really use these contracts for whatever the need may be. Now, we've added a minimum interest credit, which basically means we're going to guarantee you as the client 1% for every single year of the contract. So if the contract returns zero for all 10 years, let's just assume we're in a 10-year contract, whatever the net premium is at the end of that 10th year, we're going to put back in 1% for every year. We also added a bailout feature, which I'll get more into once we take a look at the interest rates, and then also a 10% free withdrawal per year. On our Ascent product, we do have a lifetime doubler. And so if your client becomes confined, now they have to be in the contract for at least 1 year. But if they do become confined after the 1 year, and they're confined for 180 days out of the last 250 days, we will double whatever their payment is. So let's say they're taking $10,000. We'll double that payment to $20,000 for a maximum of 5 years, or until the contract value goes to zero, whichever one happens first. So as I stated before, there are different variations depending on which state you are in. So whatever state you're in, please, 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 whatever you do, get a hold of Jim, get a hold of Scott, get a hold of the guys over at IMES to go over whatever state you're in to make sure that you're selling the right product. I'm talking about just the kind of the general overlay of the product itself, but there could be some different variations and some different nuances based upon the state that you live in. For example, as you can see here, we have a red state, which is Florida. You have the Ascent Pro 10 bonus and the 2.0 based upon different ages. I don't want you to sell a 2.0 to a 70-year-old when actually they're going to get the Ascent Pro bonus 10. So let's just be aware of that. Call them if you have any questions. You can call my team here at Athene, myself and John Cravens. We're more than happy to help as well. Here are our interest rates. We do have our BNP strategy. I know a lot of people, that strategy was extremely popular, and so what we did was we added a 1-year BNP. We had a 2-year BNP, as you can see, which is right there at the top, and you can see we have participation rates. It's a par rate, 75% par rate on the Ascent 10 bonus 2.0, 50% on the 1 year. The BNP is very popular, so we want to make sure that we keep with that. If you look down a little bit more on this screen, you could see right underneath the 1-year point-to-point S&P, we have what is called the bailout cap rate. So if we were to drop the cap below this point at any point in the contract, it doesn't matter if you're in this strategy or not, which is something that I really like about this. Whether you're in this strategy or not, we will allow the client to bail out of this product. Right now it's at 275. If we drop it below 1% on the Ascent 10 bonus 2.0, the client can actually get out of the contract even if they're in the BNP strategy. If you have any questions about the BNP strategy or our Morningstar strategy, let me know. Just for those who don't know on the call, we really took a lot of time in how we picked our strategies with BNP and Morningstar. We wanted someone with some name brand recognition. We wanted to provide the client with some diversity in their assets. And then also we wanted to make sure that we were able to give the client net customer value, really kind of provide them with what they were looking for in these strategies by providing them actual returns. So we wanted BNP is actually the third largest investment bank in the world. But for my tennis fans on the call, they actually are a big sponsor of the French Open. Um, Also, Morningstar is just one of our. I mean, if you've spent any time in this business, especially on the security side, Morningstar is arguably, I would say, a household name, especially due to their research. With BNP, what we do is we take 8 asset classes. There are 2 asset classes from 3 different countries, so the U.S., Japan, and the Euro. We take their future treasuries and we take the bond markets from both from all three of these economies. So that makes the 6. So 2 from each one of those 3, and then we have 2 commodities, livestock and gold. We put them into this filtration system, which is a proprietary system that we built with the bank, with BNP, and they filter out whichever one of those is performing the best any given day. It's a daily relook, daily rebalancing. We look at it every single day, and if one is underperforming, they switch it out with one that is performing better. And so we like to make sure that we give our clients that gives you a little bit more of a global approach to their funds. Morningstar, on the other hand, we take a look at dividend yielding companies, the top 75 dividend yielding companies, put them into a filtration system, track their progress, and if one falls out of the top 75, we replace it with the next 75. And that's how we operate it with the Morningstar. Many of you know that dividend yielding companies in the past 10 years has traditionally outperformed companies that are not paying dividends. Those who are paying dividends seem to have a stronger place in the market. They are more steady in the market. They have stronger returns in the market, and so those are the ones that we're hedging our bets with. Looking at our options, just the bonuses here. These rates are obviously these are our newest rates, which is where the rate increase came in. For the Pro 7, it was 3, now it's 5. It was 5 on the Pro 10, now it's 8, and it was 5 on the Ascent Pro 10 bonus 2.0, and the other bonus options as well. But we beefed it back up to 10% on option 1, which is really a really good opportunity for your clients. The annual rate of charge is 1%. We do have, it is a 20-year period on option 1 and option 2, 10 for 10, and then 5 for 10 on option 1, 8 for 10, and then 4 for 10 on option 2. It will stop at that point at the end of the 20-year mark. Here's just a kind of a look at our Ascent Pro series right here. You can see issue ages 30 to 80. Please make sure that you double check with IAMS or my team to make sure that you're writing the correct product. Minimum premium amount is $5,000 with a maximum of $1 million, and that's without home office approval. We can accept more than $1 million. If you do, just shoot Jim or Scott an email or myself, and we're more than happy to go over that with you. And then, as you can see there, our withdrawal charges, vesting bonus, and then our rate of charge. So we've discussed our income. We've talked about option 1, option 2, level inflation and earnings index. We've talked about giving them a bailout cap. We've talked about an opportunity for them to, even if they become confined, to get double what they're already getting as far as income. Let's talk about the second point, which is accumulation. Our Athene Performance Elite is the product built for accumulation. So when you think income, think Ascent Pro. When you think accumulation, I want you to think Performance Elite. Our Performance Elite, we have a bonus of all the way up to 12% market-leading credit strategies, and we've even beefed up the liquidity on our Performance Elite. So if you have cases where you're rolling over products from other companies and you have a surrender charge, take a look at the Performance Elite because it's really given the opportunity to replace that business if you feel that this is a better fit for the client. You have a surrender charge of 4 or 5%. We're able to give them a 12% bonus. We're able to bring the client back whole. That is definitely something to take a look at. Now, based upon the state that you live in, these products will vary. So please make sure you call Jim or call myself here for us to make sure that whichever state you're in, that you're selling the right product. You have two different versions here. You have the Performance Elite base product, then you have the Performance Elite Plus. On the PE10, you have a 4% bonus, 1% in California, 9% on the Plus, 5% in California. As you can see, even if you look at our Performance Elite 15 at the bottom there, 7%, and then 12% on the Plus version, 9% in the state of Minnesota. Like I said, this product is built strictly for accumulation. No income riders, no riders on this product as far as income goes at all. So that allowed us to really put forth a big effort to putting in some pretty strong caps and par rates. As you can see, our BMP product is offering on the 10-year 115 par rate with 135% in the Performance Elite, and Morningstar 95 and 105. And then also you can see at the top there are 1-year point-to-point cap if you like the S&P. I have a 5% and a 4.5 on the 10. Using the 2-year BMP strategy, you can see there the highest interest rate return in this product has been 6.93, and then on the Performance Elite 15, 8.08. That's some pretty strong. Now, obviously, what we did was the BMP hasn't been around that long, so we had to put this in and basically modulate this to kind of track the process of this to see how well it would perform. And these are the numbers that we were able to come out with. I'll definitely take even the lowest, if you see there, even if you take a look at the lowest. If Matt Campbell was doing this presentation, he would definitely tell you take a look at the lowest rate and see if you even like the lowest rate, and that would definitely be something there. Looking at the liquidity need of the client, with the Performance Elite, just the base product, obviously you can take RMDs. We do have a confinement and terminal illness waiver and 5% penalty-free withdrawals. But if they need something a little bit more, they can definitely get more bonus, as you can see. On the 15-year, it goes from 7 to 12. With the Plus version, you go from 5% penalty-free withdrawal to 10%. If you do not take anything in the first year, in the second year of the contract, you can actually take 20% free withdrawal by using the Plus version. And at the end of the fourth year, if the client isn't happy with their rate of return in this product, they actually have an escape. They have an escape route, and it's called the return of premium. This is their off ramp. Driving down the highway of the Performance Elite, they're not liking the way it's going. They have an off ramp in the fourth year with the return of premium, and that's on the Plus version. That does come with a rider charge of 95 basis points deducted from the cash value. The rider cannot be terminated during the withdrawal charge period, so if they're 10 or 15 years. But here's the best part about it. At the end of the surrender period of the contract, the rider charge goes away. So let's say they put the 10-year, they go past that, they're no longer getting charged that rider fee. Here's just a quick example of how the 20% work. If you take 0 in the first year, you could take 20 in the second year, then you take 5 In the third year, you can still take 10 in the fourth year. You just can't take 20 in the fourth year because in the third year you did take a withdrawal. But had you skipped the third year, you could actually take 20 in the fourth year as well. Just a quick side-by-side glance, premium bonus. You can definitely take a look at that with the Performance Elite, enhanced bonus, confinement and terminal illness, the free withdrawal aspect, and then obviously the elite gives you a little bit more opportunity there, especially with that return of premium. Depending on which state you're in, this could vary. So please, again, I can't stress it enough. Please make sure that you get a hold of myself, John Cravens, or especially our friends over at IMES, Jim Guinan and Scott and their team, to make sure that you are writing the right product. The minimum on this product, I want to point out, is $25,000. The minimum is $25,000 on the Performance Elite with a maximum of $1 million, but we can get it over $1 million. Just obviously shoot us an email, give us a call, and give IMES a call, and we can discuss it. So that's all that I have for you all today, and I appreciate you taking time out of your day to definitely listen to what we have to offer. We don't take it lightly because any time that you spend with us, you could have been spending selling to a client, with family, or whatever it is, definitely something better. But we appreciate you being willing to listen to what we have to offer. One thing I definitely want to leave you with is that Athene, we are definitely here to stay. We want to make sure that we provide our agents with anything that they're in need of for the marketplace. If it's income, we want to provide you with the best. If it's accumulation, we want to provide you with something that you could sell. At this point, I'll hand it back over to Jim, and we have a little bit of time for some questions.
Thank you, Rob. I appreciate it. Very good information, and we did have some questions from your presentation. And one of the questions asked here was, does the client continue to pay the rider charge after they've started to take income withdrawals? And again, this would be on the Ascent.
So yes, so that rider charge is there. It's 1% is for the life of the contract. Even while they're taking income, they will still have to pay the rider charge.
Okay. All right. Good. Another question was on the Performance Elite 10 and 15. And I get this question now and then, if just the base version with the 5% withdrawal, is that RMD friendly?
Yes. Okay. If you remember, I was showing, there was like a little graph. The product is RMD friendly. You can take out your RMDs in the first year of the contract.
Okay. So they don't, on both 10 or 15-year products. All right.
Correct.
All right. And then another question here from a listener was, how does the Athene Ascent Accumulator Series compare?
So really, a lot of times with the Athene Accumulator, you don't have a bonus. You do have 10% on there. But if you have a client that needs to roll over some funds, then the Performance Elite is where you want to stick to. You want to stick to the Performance Elite. And the accumulator does have its place, but if you have clients that definitely want to roll over some funds, definitely take a look at the Performance Elite.
Mm-hmm. Okay. All right. Well, that's all that I have for questions and from producers here. And I did want to, lastly here and not least, to launch a poll question for those of you. I know that you took the time, as Rob said today, and we appreciate it. I did throw out a poll here. If you're interested in getting more information on the products that Rob talked about today, or to get appointment paperwork and get contracted up and running with them, please answer yes to that, and we will get out the information that you need to get appointed through us with Athene. And we'd be glad to get you any of the information that Rob talked about here today Very informative. We certainly appreciate your time, Rob. And I'm going to close the poll
Absolutely.
here in a few seconds, but we do appreciate your information. It's always good to keep up with what's going on at Athene because things change quite a bit. And
Yeah.
anyhow, at any rate, we thank you for your participation today and have a good rest of your week. Thank you so much.
Thanks again, Jim.